Hi, I'm Mark and welcome to Little Known Stocks, the show where I try to prove that being boring and doing your research will make you money. Now today I'm going to be talking about GoPro, and if you haven't heard of GoPro, where have you been living? So GoPro are known as a camera manufacturer, so they make this camera here and many others like it. They're known as very versatile cameras that you can use underwater, etc. For extreme sports. And very versatile. I actually started looking at this company because I wanted to buy a new camera for YouTube. But much more than that, there's been a bull thesis going around recently that GoPro are going to really grow their revenue and grow their profitability over the next few years as they tilt to a subscription model. So when you buy a camera with GoPro now, they try to get you to subscribe to their GoPro Pro, and it's the subscription model that gives you unlimited cloud storage, up to 50% off at GoPro.com. So they do a basket deal. You get a camera replacement service, so up to twice a year. If you break a camera, you can send it back and get a replacement without any questions asked, and that comes to £50 or $50 per year. So pretty reasonable for all of that, depending on how much you're using your camera. Not only that, but they also have an array of other apps, most notably GoPro Quick, which is editing software. It's the cloud storage, etc., for any device. So not just your GoPro, but you could use it on your phone, on your desktop, whatever you want to use it for. And you have the same type of subscription model where you can pay for cloud storage, editing, etc., etc. That's $10 or £10 a month. So what they aim to do, GoPro are around a $1.57 billion company, if I can find them. And what they're aiming to do is drive this year an extra $100 million of revenue. So they, in Q1, hit 1 million subscribers and really ramped up their subscriber numbers, which you can see just here. Here we go. They've grown 165% year over year, so that's really, really great. But also they're aiming to increase up to 2 million subscribers by the end of the year. So the way that they're doing that is they're essentially driving sales through GoPro.com, and they're driving you to subscribe and get a bundle essentially. So when you buy a camera on GoPro.com, it triggers it and asks you, do you want to get the bundle for free? You get the subscription, and you're then essentially on a are you going to cancel? Are you going to stay in that subscriber base going forward? So few things there. The first one is the online sales. So the other way that GoPro are really driving profitability is by increasing the percentage of online sales that they're having. So if I just zoom in here, we're seeing that last year, for example, GoPro.com drove 21.2% of revenue. If we look at Q1 2021, we've doubled it essentially to 40.3%, $82 million of revenue, which is really, really substantial through their website, and that's certainly improving their profitability very, very significantly. What that also enables them to do is drive this push to subscription. And they mentioned on one of their earnings calls recently that the take-up on GoPro.com is nearly 90%, which is really astounding in terms of you have 90% of people buying a camera on GoPro.com that are signing up to the subscription service. And that comes with a few caveats that will fall away massively when it becomes a paid subscription, and it remains to be seen what sort of fallout that has. So I really want to understand that going forward, but certainly they will be driving the initial subscription and the use of the app, which is really crucial. Secondly, what I really want to see is, are these numbers sustained after we reopen and after people are more comfortable going back into retail chains? You can see 60% is still a very high number, but significantly below where it was. Are people going to start buying GoPros in airports, etc., where not only are they less profitable and driving less margin because they have that middleman, but also are they they're losing out on the subscription base. So when I said 90% online subscribe, it's 6 to 12% in a retail environment. So that's a massive gap and a big risk in my eyes. They really need to drive up that retail number to make sure that people are going in store. Maybe they can redeem a voucher afterwards. Maybe they get some money back on their purchase or something like that to drive those subscriptions in the retail channel much further than they are now. That really is a poor and unprofitable part of the business, which has got them in trouble in the past. Now, if we look at GoPro and the charts, they are around 1.57 billion, which isn't a large company, particularly given their brand recognition. If they've got a subscription kind of tech model and a manufacturing model as well, that's a really great thing. If we look over the past 5 years, you can see they've been hovering up and down, bobbing up and down. I think they got into the 2s at one point. They're now at 10.19, in a much better place, and that reflects that they've improved their revenue. But if we look back further at the max charts, you can see at one point they were up at $82 in 2014. So they've really declined massively. And if this company can improve their profitability, they may really start to move up very quickly. So let's look at their historical earnings. I'm going to show you a couple of sheets here. One is their latest annual report, which goes into the last 3 years, and one is the latest quarterly report, which shows us just March 2021. So first off, what you need to realize is that GoPro are a really seasonal business, and they tend to lose money in the Q1, Q2 period. They then, in some cases, start to make a profit in Q3, and then they really reach quite good profitability in Q4. So overall, we're looking to see maybe a slight loss in March and make it up later in the year. But if we look at the latest earnings report, we can actually see that the loss in March was much smaller than it has been in previous years. And 43 cents last year, 7 cents this year. And not only that, but they've also stepped up their revenue. Now, if we look at what happened last year, their revenue got beaten down significantly. So for example, the Q4 sales went from nearly $500 million down to 357 million. So really significant decline. But what we're starting to see is that actually they've beaten their last year's revenues, which is good. Obviously, they're cycling that COVID result. If we look back at March 2019, they're not there yet. They're not achieving the same levels that they did pre-COVID, but they're certainly taking a step on. And part of that will be the fact that things are reopening a bit more, and part of it will be the fact that they've got this subscription model, which is adding a new area of revenue. But what I really don't understand and what I really want to see is how much of this extra profitability is driven by sustainable factors. And what I mean by sustainable factors is, like I said earlier, when all the shops open again, are they basically going to replace those lost sales that we've seen in previous quarters with retail sales, which are going to be far less profitable? And does that actually tip them back into a loss-making business? And that's something I really don't understand about this company based on the information that they've shared with us. Is the GoPro online, GoPro.com revenue, it's definitely much more profitable, but is it just the same that it's always been, and increasing as a percentage? Or are people going to switch back to retail, and therefore just, we're going to see the same loss this year than we have in previous years? Now, obviously, we have seen a big step up in terms of 25 million last year on GoPro.com to 82 million is substantial, but can they maintain that same shift? I think that probably they can, and I think that most companies will see that people are much more comfortable shopping online now, but it does remain to be seen whether that can be sustained and whether the retail does pull them down from a profitability point of view. There's also a lot of double counting going on, and don't get me wrong, these numbers are phenomenal in terms of their online growth, but people are double counting, and I think it's dangerous to set your assumptions too high, and we need to think about how the numbers actually break down. So total revenue growth of their online platform is 223%, absolutely incredible. But the GoPro subscription makes up 10.7 million of that in Q1 2021. So that grew 123%, and other revenue, so that the cameras and the accessories, grew 246%. So actually more growth is coming from the cameras and accessories than is coming from the subscriptions. But what I'm hearing people say is that the subscription model grew 123%, and then there was the 223% on top of that. That's not the case. So just be aware of that, and make sure you do that in your calculations and do the due diligence there. So I also wanted to mention this article, which is an interesting bear thesis on GoPro. It's not entirely bear, but it's showing some other information, and I think it's always important to look at the downside and try and research even more on the downside when you're looking into buying a share. So the basic premise of the article is that GoPro have three markets. They have holiday, which is their biggest market by far. They have outdoor sporting, BMXing, swimming, mountain biking, whatever it is. And they have YouTube. Well, YouTube and other streaming. And what the article is basically saying is that although they haven't done well in the holiday market, which obviously they haven't, they have actually seen a boost from the other two. So the online streaming and the outdoor sports, which presents some fair data. I think the best data is that Dick's, the outdoor sports shop, has actually seen a nice healthy upturn, and certainly similar stores are seeing that sort of thing as well. We know from companies like Corsair Gaming and Logitech that they're seeing really strong sales on the camera side and on the streaming side. So that certainly makes sense. The only thing I'd say about it is that the revenue just doesn't support it. So 2016, 2017, 2018, 2019, very reliably between 1.1 and 1.2 billion. 2020 then dropping under 900 million. The numbers just don't support it, but certainly maybe it's the case that they won't boost their sales as much as people are expecting once the holiday market returns, and maybe it will just go back to where it was. Or maybe the fact that they've had this streaming advantage and outdoor sports advantage will mean that they do boost sales continuously. And if they can keep that market going and maybe grow some share that they didn't have before, it may even be that helps them in the long run. So we'll just have to wait and see on that. But it's an interesting theory that I wanted to share.
I want to make it clear, because some investors have been confused about this. GoPro was not a COVID beneficiary. The consumer dollars didn't shift from, doing other things like travel to GoPro. The reason why GoPro did well over the last year is we shifted our business to a direct-to-consumer strategy and a subscription strategy, and that delivered the, frankly, quite impressive results last year amidst the depths of the pandemic.
Now, what's really, really improved is their cash position. So if we look at the last quarterly report, it doesn't look like a massive win, and they've moved from $325 million in cash to $296 million in cash. But what you need to realize is that this is a very, very seasonal business. So Q1 is always their worst performing quarter. If we compare that to last year, they were sitting at 150 million in cash. So they've essentially retained a doubled cash position. And this is really, really important because they were asked recently, and I'll play you a clip shortly, what they plan to do with this cash, whether they plan to make mergers and acquisitions, whether there's significant development costs they need to pay for. They're not making mergers and acquisitions that are significant. They don't have significant development costs that they need to pay for, but they are thinking about share buybacks, and that would essentially increase the power of the remaining shares, and the earnings per share will be split amongst a much smaller volume. So that could be really significant. If you think about the size of the share portfolio, 1.57 billion, and you're holding, nearly $300 million in cash, that's a lot of share buyback that they could make, and that could really, really make this a great company to own.
Yeah, maybe I'll add to that. and just say, look, we expect to be end with cash in 470 million to 500 million in 2021, so up 150 million or so, or better on the year. That I would expect to continue in 2022. We have 125 million notes will pay off in April of 2022. But beyond that, if we can continue to generate cash flow, I think there's opportunity for some share repurchase to cover dilution. So we'll look to that as we get to 22 and beyond, as we shore up the balance sheet and we have the opportunity to give something back.
So I've spoken quite a lot about some of the potential risks with GoPro, and maybe I've sounded a bit pessimistic, but I do really like the company, and I am thinking about investing a sizable position in the near future, possibly pretty soon actually. I think it's just too good a deal in terms of the financials to not take a look, and maybe increase to a larger position sometime in the near future. But with a forward PE, if they manage to retain and hit that profitability of under 13, with the price to sales ratio of just over 1.5, really it's very, very attractive at this point. And I think that there is significant potential to 2x, 3x, potentially in the next year or so, if those subscriber numbers really pick up. So I am pretty bullish on GoPro, with the caveat that I want to see sustained subscription growth. I don't want to see them fall off as people cancel their subscriptions. I want to see the revenue return, but return profitably, so not returning to the retailers sapping all the profit out of the product. I want to see share buybacks and value added, and really using the cash that they've built. And I just want to see a bit of enthusiasm around maybe some outdoor activities and people wanting to go on holiday. That's not something that obviously GoPro can do, but I want to see a change in the culture and really people being able to start move about again, and that will have a really, really strong impact on this stock. So I'll leave it there. Really interesting company, really interesting pivot to a new business model, and I can't wait to see what they do in the next couple of quarters, and hopefully we make a lot of money on this stock. So if you like the video, please like and subscribe. Otherwise, have a good day.